Well, welcome back to our 2021 College Roadshow from right here at The Ohio State University. Some great ag economists joining us today. Simke, I want to start with you because this week, big USDA report week, we did have a shock when it came to soybeans, an adjustment that apparently the trade did not expect. How much did the production picture actually change, Simke?
So, I think overall production change has not been, is not that bad, but the soybean yield has slightly adjusted down, but the overall production outcome is quite large still. For instance, the corn production is over 15 billion bushels, which is a record high, and the nationwide corn average corn yield is about 177 bushels per acre. That is also a record high. So, and I think almost the same story applied to soybean side as well, although the projection has been slightly down. So apparently farmers did pretty well, even though they had gone through pretty tough weather challenges this year.
Yeah, when you look at some of those challenges, at the same time, we're seeing some impressive yields. Demand, I mean, it's not what it was last year. So, you know, is it unrealistic to think that China will buy at the same rate that they did last marketing year?
At this moment, it's hard to imagine China will buy the same amount as last year. For instance, the soybean export shifts actually showing about 33% down compared to last year. So maybe that is probably because of their domestic demand has changed, and it's at this moment hard to imagine a big shift can change immediately from now on.
Yeah, and when you look at the trade picture, I mean, you think about the height of the trade war and how little we saw China buying, and then last year just the monster buys that they made. You know, in this year, it's kind of hard to remember what is normal when it comes to China buying. But, you know, as you look at them, they've rebuilt their swine herd from what we've heard. Is there any reason to believe that China is going to need more corn and soybeans from the U.S.?
Well, China's still forecast to be our largest export market this year. So the ranking is China, Canada, and then Mexico, which is exactly what you'd expect here in North America with the North American Free Trade Agreement, and just the fact that we're close by geographically. But China is forecast to be our largest export market. But in terms of the US-China Phase 1 trade agreement, which was signed by the previous administration in early 2020, in terms of agricultural exports, it looks like for 2021 we're going to hit about 84% of the commitments that China made to import. So, and a lot of that's going to be dependent as we go out towards, through the end of the marketing year, particularly how much corn and soybeans are exported to China. But if you look at exports to China across commodities, soybeans are not hitting the target that they were expected to hit, but corn is way over target. We're talking about 1,000% higher than where it was expected to be, along with our pork exports have been very strong to China, and our wheat exports and our cotton exports. So you have to sort of look at it in the aggregate and by commodities as well.
Yeah, have perspective with that. Yeah, thank you, Ian. Well, Zoe, when you look at here at home, open up any paper, any website, any headline, and it's talking about food prices right now, the latest meatflation, looking at how fast some of these meat prices have risen. I mean, is there reason to believe that we will continue to see these meat prices rise at the consumer level?
You know, I think that over time they're going to moderate. What we're seeing in general and we've seen this throughout the COVID-19 pandemic, is that supply chains are less predictable, and that's really hard to adjust to. Right now we're in the holidays. A lot of people are trying to, they want their usual turkey. They want certain things that they're used to buying at this time, and both with the kind of increase in aggregate demand that we've seen due to just kind of coming out of the height of the pandemic, plus these continual kind of like the COVID-19 pandemic rearing its head in meat supply chains, we're seeing the confluence of those two things. They both push prices up. So I do think it's going to moderate over time, but we're going to continue to have some uncertainty, and sometimes what you want at the store is not going to be there when you want it, or not going to be at the price point that you want. It's going to take some time to get back to kind of a predictable level, both for consumers and for producers.
Domestic meat demand has been phenomenal. Do you think with these rising prices, it continues to stay that way?
You know, I do think that people are really trying to get back to some semblance of normal, right? That's something you mentioned with you know, what is normal? We don't really know what normal is yet, but I do think that we're going to continue to see people want to get back to some semblance of normalcy, and that means, you know, we had more like shelf-stable foods that people were buying, people were really kind of hunkering down. Folks don't want to hunker down anymore, right? Food away from home prices are predicted to go back up in 2022, right? People want to get back out to restaurants, they want to see people, they want to have, you know, more of that normalcy. So that's gonna buoy demand.
Well, one thing that's not normal, the supply chain. And so we're going to get into exactly what's at play with the supply chain with all of our economists later on U.S. Farm Report. But first, let's take a quick break.